What's going on, guys? This is Aaron from Departures Capital, and we're here with John Feneck, CEO of Feneck Consulting and Portfolio Manager in the mining sector. It's a pleasure to have you back on, as always. John, how's it going?
Thanks, Aaron. Going well.
Perfect. So I'm excited to be chatting just before PDAC. Can you tell us everything that you've been up to since we last spoke? I know we speak quite frequently, but
Sure.
you're always up to something.
Yeah, so I went to Vancouver, to your town to do the VRIC conference, which was pretty productive. We had somewhere around 16 to 18 CEO meetings in 2 days, so jam-packed. Interviewed for Kitco and a few others. Um, and Yeah, I mean, been watching the computer outside of that, no downtime for me. I mean, it's been a rough start to the year. If you had told me that gold would have been ending on December 31st, a few dollars from an all-time high, and then we'd be seeing this in gold equities or even silver equities, just fast forward 7 weeks, I'd be like, come on, Aaron, let's get real. Like this has been really tough. So, and the reason I say that, I mean, look at GDX. Okay, that is the behemoth in the world for mining money, right? If you want an easy way to play the space, but um, it's been extremely disappointing. The 2562 level is the multi-month low. We came very close a few days ago at 2568, and now we're just above 26. So, flirting with that multi-month low is not something investors want to see, especially when the components of GDX have been beating earnings. If you look at
Mhm.
Agnico, which is a holding of ours, AEM, beat by 8 cents and beat on revs, and like the stock has actually bucked the trend here. If you look at that chart, it does not look like Newmont and some of the others, right? But
Mhm.
gold, Barrick beat by 6 cents, Newmont NEM beat by 4 cents today. Yet these stocks are just not moving up, and investors are not happy, and I'm not either. So it's a matter of trying to find a way to get to a sector rotation. That's what's needed right now. Bringing larger investors into the space that not necessarily have been mining investors in the past. I think a lot of mining investors are getting a bit worn out, being that it's August of 2020 was the high in the sector, and now we've been living through 3.5 years of, pretty bad price action.
So just wanted to ask you while we're on this topic, like, do you feel like, let's say crypto, Bitcoin, the tech rally, is that taking equity away from those gold stocks? Because I mean, I would have never
Yep.
predicted that they would be where they're at, even Barrick, Newmont, B2, all the majors. What do you think? I just wanted to get your opinion before we go to the next question.
Yeah, absolutely. That's a very good point, and it is happening. I mean, you look at Nvidia's numbers tonight, overnight. I mean, stock was up 15% the last I looked. It's just ridiculous, FOMO kind of move in tech and AI, and that is attracting a lot of capital. And we've been on your show since last May saying we pulled our recession call because we started to see that last,
Mhm.
10 months ago developing. And I said, I didn't go long. I'm not saying I went long, but I'm saying that I recognized the trend and said, let's be less bearish
Mhm.
about the economy into 2024. Now, I still think that there's a very good chance that something happens that's not foreseen in terms of a recession later this year or into 2025. But right now, I mean, you have to look at these broad markets and respect the tape.
Definitely. So uranium has been a hot spot in the market, as we know. What are you doing to cover the sector right now?
Yeah, so I went to Uranium Night at VRIC, and met like seven CEOs in 2 hours or something. Had some drinks with some nice people, and I met with Forum Energy there, which is a holding we've disclosed on your show before, FTCFF. They're excited because they just raised about 11 million bucks, and they're going to drill the heck out of Thelon Basin targets this coming season, which is only a few months away. So the stock did real well and has faded since, but at 9 cents US, it's like, the low was 4. So I mean it's made a nice move off the lows from August, but it's still got a long way to go because it hit, about 15 and a half in the rally a few months ago. So, you look at those kind of opportunities, Aaron, and say, okay, I'm not getting it for 4, but I'm also not paying 15 and a half, right? You're paying somewhere in the middle. And that's what you look for is a pullback in a strong sector with momentum, whether that's tech, whether that's uranium. you have to look at these opportunities as buying opportunities. Another one is Standard Uranium. I met John Bay in at VRIC. They've got a lot of news flow going on. They're drilling a lot of different projects over the next 6 months. And so they're spreading the risk, right? They have about 10 projects right now. So again, bought more this week at 0.0427, which I think is the weekly low in the US. It had run to 7 cents though, right? So it's like I'm not paying 7, I'm paying well
Hmm.
below that. And I think the stock is worth more than 7, right? So like, as value investors, we're patient, we're not going to chase. Another one I had lunch with since we last met was F3 Uranium, which is FUUF or something. Yeah, that's right.
Hmm.
And Dev and his team have been producing just regular news. I mean, as investors, we want to be informed of good and bad, right? And if you look at their website, 7 of the last 8 news items were something decent. I mean, like another one was just announcing something corporate related. But 8 news items in 7 weeks, that's keeping in front of investors and saying we're not going to abandon you in a period of time when you need to know what's happening, because juniors, regardless of the sector, are going through a tough time right now. So that stock's backed off its high recently of 41.5 cents to trade at 31 right now as we record this. So we're buyers in the 29 to 31 range. And Strathmore is another one that's been on our radar, SUUFF, and they're going through a financing right now. So the stock, of course, is under some pressure. But again, it's gone from 40 to 30 cents. So it just hit an 11-month low today. So is it really, a 20 to 25% haircut because they're doing a financing? I mean, come on, everyone's doing financings in uranium right now. Everyone wants to raise money when they can and go out and drill these targets.
Exactly. So how are you positioning yourself right now? What are your thoughts on rates?
Um, we are pretty conservatively positioned because of the negative price action we've seen in mining year to date. And by that, I mean we've gone from about a 11% cash position at the end of the year, 12% to 18% now. So, we're carrying some cash to see if we can, bottom fish some of these names and make money for clients. I mean, that's the name of the game, right? Clients are getting frustrated by lack of performance in the sector. They have every
Hmm.
right to be. I think you need to hold companies accountable at this point in the cycle and ask questions. Good companies will return your calls and emails. And, that's just, if they're not, then, email me and say, have you talked to these guys lately? Or just join up for one of our services. We're not expensive, and I'm doing a lot of hard work for clients for a fee. But, I think it pays off because sometimes you just can't reach some of these people, right? When you look at the Fed situation right now, Aaron, it's a stark change from our last appearance on your show. March 20th was looking like a rate cut on the
Hmm.
last time we recorded. As you and I just talked about off camera, it's now a 4% probability of a rate cut on March 20th, which is clearly not happening now. If you look at May 1st, which was a 85 to 90% probability on Jan 1, it is now a 50% probability, or sorry, 26% probability, right, a quarter of a percent, chance of this happening. And yet the market's raging higher like we're getting a bunch of rate cuts. I don't understand what's happening at this point.
Hmm.
June 12th meeting even is at 50%, right? And that was like a guarantee.
Hmm.
So I don't know. I mean, if you don't get rate cuts by May 1st or June 12th, I think the market's gonna have some comeuppance in Q2 at some point.
Yeah, I think those vulnerable sectors will be tech too. So, and I wouldn't mind seeing that. I'm more of a commodity bull. So,
Me
anyways,
too.
is there anything else you're looking at in the equity markets right now?
Sure. So obviously, we're seeing a lot of conflict in the world, and when you look at all of we've been tracking defense stocks as a result for the last 2 years since Putin's actions in Russia. But now you've got the Middle East. As of October 7th, things have really heated up in certain parts of the world. We had 3 U.S. casualties a few weeks ago. The U.S. responded, a couple days after that pretty aggressively, and this is something that investors need to watch. To that end, tungsten is a product that is a commodity that's used in making ammunition. And so when you look at tungsten projects in the US that have a chance of getting funded, right? I mean,
Mhm.
there's not a long list. I just talked to Fireweed yesterday. Brandon and I connected for the first time. Really interesting story there. They have a more developed project than the one I'm about to talk about, but I think that either of these projects are worth a look from investors. Golden Metal is the one that I was going to bring up today, which is GMTLF. And I bring it up because their news flow in January and February has been outstanding on two different projects. So they have a bunch of projects. They're all in Nevada. They just went OTC like 3 months ago. So the volume in the US is pretty light, but the main stock, which is based in London, trades a lot of volume. So that is going to get some love if they get any type of grant from the DoD. Same with Fireweed, I think. I think they're both very well positioned because when you look at tungsten, 86% of it's produced in China.
Mm,
And the U.S. government has said that's stopping. We're not taking Chinese imports as of January 1st, 2026. So that's 22 months away. It's like something's got to happen here. I mean, the U.S. has really backed themselves into a corner with certain commodities. I think you
mhm,
and I agree on that.
definitely.
And it's like this is definitely at the top of the list right now. If you can't produce ammunition, we're funding pretty much two different initiatives right now, right? Like it's crazy. So that's an interesting one. I just talked to Quebec Precious Metals, a couple days ago, and they've had a larger seller in the stock. It's created a lot of liquidity in the stock, though, and in looking at what they have, right? They have a gold project, they've got a lithium project with a lot of upside when lithium starts moving again, and they have a rare earths project. So they're well diversified, led by a guy named Norman, who just has been in the business a long time. And every time we talk, I feel more and more comfortable with the
Mhm.
story. And so that's something that we've been legging into here over the last few weeks. And lastly, I would say, the nickel space is starting to look more and more interesting. We've got two that we have been starting to add to more, which is Stillwater, PGEZF. Again, under 11 cents here. I don't know. It's not a back up the truck moment, but it's surely like a great value because they're attached to a major, Sibanye, which is based in Montana. So great jurisdiction attached to a major, trading at a fraction of what the major's trading at,
Mhm.
obviously. And at some point, people are going to need, nickel, platinum, palladium, and it's not today, but it might not be that far in the future. So as value managers, we like buying things that are on sale like that. The other one was Power Nickel, PNPNF. I really like Terry Lynch as a leader. If you look at his December news flow, it was pretty outstanding in November and December because they had their 43-101 at the end of November. And then in December, they went after some short sellers and some banks that have been negatively affecting their share price, which I love to see in leadership. There's not enough people standing up for that kind of a thing. And um, One more I'll give you guys, which is Vortex Metals. Vortex Metals is one that we just, in full disclosure, started to buy about 10 days ago. Not in a large way, but I think we'll leg into that over time because I did a 40-minute Zoom with John Larson, who's on the Geo team there. John had spent 16 years at BHP, and when you have one of my favorite things in this industry, Aaron, is aligning myself with people that have worked at big companies like Barrick, Newmont, BHP, because they know what to do, right? They know what to do in an 0809, they know what to do in a 2020. You want people to lead you through times of trouble, which kind of we're in right now for juniors, right? So instead of just crossing their fingers and hoping about their Mexican assets, which are quite good, they went out in November and acquired a Chilean property, which John walked me through. And there's a really interesting story there because they've got a lot of near surface targets. When you look at where they're producing right near another producer. So, or they're going to produce next to a producer. So the infrastructure is getting built already. Um, I think they're about 3.5 hour drive from the capital, Santiago, on paved roads, obviously. So it's like it's got a lot of things going for it over the next few months if you're a copper fan, which we are.
Awesome. Well, thank you for sharing all those new ideas. So, what advice do you have for new investors to wrap this up?
Yeah, sure. So I should mention that I became an advisor to a couple of conferences, and I one of my suggestions would be to attend a conference. You know, if you haven't before, this is the time you want to go. You don't want to go in, spring of 2020 when everyone else is going. You want to go now because people are giving up, and this is the time to do the homework and get some great, executions on trades, right? And so the way you do that is by building confidence, talking to CEOs. The conference I'm involved with, April 29th and 30th, is in Washington, D.C. So for those of your listeners that are in the U.S. or in Toronto, it's a quick flight. And it's going to be the CEO of Cameco, Rob McEwen. We're trying to get Eric Sprott. We've got a bunch of people from the DoD, DOE lined up. Should be a fantastic speaking group, but also just jam packed with great companies in the uranium, copper space. A lot of the names that we just talked about are going to be attending. So I'd be happy to help any of your listeners in getting into the conference for a discount or for free, depending on what their intentions are and their background and stuff. But outside of doing something like that, I would say cash is king right now. You have to have some cash. Like you have to build cash by looking at your holdings and saying, is this thing ever going to come back? Right. You have to have those honest conversations with yourself. We do it every single week. It's painful, but some of this stuff, it's opportunity cost, right, Aaron? It's like if I can have something that will go up 10% in a rally, that's great. But maybe I could have something like, golden metal where it's like it trading at 16, 17 cents US, it could go to 30. I mean, it's like there's not they have the largest undeveloped tungsten deposit in the US. It's like if something happens that's a sea change in their organization, stocks like that can fly because there's hardly any public float. There's 61% of the company is owned by another entity. So, it trades thinly, yes, but that's also a positive in a good market. So those are a couple suggestions for you there.
Awesome, John. Always a pleasure. Well, thank you for all that knowledge, like always, and best of luck with everything. Have fun at VRIC, and we look forward to having you back on.
Thanks a lot, Aaron.